Good morning, Paul Georgie from Allendale. It's June 21st, Tuesday morning. It's the beginning of summer, and we certainly got some heat throughout the Midwest here. But weather, I don't think, is the major factor affecting grain prices right now. It's the short covering. As we see it, the market has been extremely oversold. It's been down. It's been 7 days down from the high we made just a little over a week ago. So seeing a rally in the grains today, very likely, and we certainly got started here overnight. Corn, beans, wheat, all anywhere from 10 to 15 cents higher. And dollar is a little weaker, crude is higher, gold is higher, so we're getting support from the outside market. The grease situation is still weighing on the investors and traders' minds. They've got a confidence vote by the Parliament here today to see if they want to keep this government in tow or they want to change the government. And I think that's an impact, or could have an impact, on the IMF and the EU if they give the money that is slated to come to Greece here to allow them to survive over the next 6 weeks or so. So that is a huge focus here today and going to continue to impact this market here over the next several days. We've also got a Fed meeting here in the U.S. They'll be coming out of that meeting tomorrow. Expect some type of announcement, communique coming out of there. We did have the USDA come out with crop conditions reports yesterday. Corn improved 1% up to 70% good to excellent. Beans 68% good to excellent. That was up 1%. And spring wheat increased by 4% up to 72% good to excellent. Weather conditions, we've got heat, we've got moisture, and some areas are concerned about the too much moisture and ponding, the loss of plants and so forth. But traders in general are looking at it as more of a seasonal June that we've got going, and rain makes grain. So that is keeping a bit of pressure on it. However, we're getting some conversations from producers that are saying that crop conditions may look like they're improving from the road, but when you get out in the field, the stands are less than what they would like to see them be, especially in soybean stands that were planted in the extremely wet soil conditions just haven't come up, and there are very poor stands there. So that is a reason to give us some support. We've also got a report from Reuters yesterday. They did a survey of institutional investors, and these institutional investors now are saying that the commodity asset class is the least class that they would invest in. So we'll see if this is just a short covering rally, if the funds come back in and buy these grains as they have in the livestock. When you look at the livestock trade, we had a sharp sell-off there in fund liquidation as well a few weeks ago, and since that time we've already rallied 50% back in the cattle market and the hog market. So we think we could see some type of a recovery such as that in the corn market especially. In the beef, we had cutout values up yesterday. $1.90 in choice. Select was $1.81 higher. That improved the cutout values again for the packers, put them back in the black in the cattle trade, and we expect cash markets this week to trade steady to a couple dollars higher. The asking prices are a couple dollars higher this week. The Friday's USDA cattle on feed report that showed that we had less placements and marketings were very aggressive is still carrying over into the cattle trade overnight. We're seeing higher prices there as well as the demand continues to improve there with the cutout values. Pork prices higher also overnight, 88 cents higher. The cash market steady higher. more exports is the main reason for the strength in the pork complex. The packers, however, margin in the hogs is not quite as good as cattle. They're mostly in the red as far as the packer margins go right now, but still willing to pay higher because the demand on the other side is good. So, looking for we would suggest to be cautious in the cattle and hog markets, as they've had a 50% retracement in a very short period of time. They are extremely overbought. Be careful and use protective risk management there. If you got any questions, we know we've got a lot of volatility going on here in these markets. Stay tuned to Allendale Research. Check us out on Twitter. You can catch us at Allendale or Allendale_Paul, and we'd be happy to keep you informed there. Or just give us a call, 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.